Hey there! Have you heard the buzz about Singapore's property market lately? For the first time in years, new home sales have hit a record low. That's right. It's been 17 years since we've seen anything like this. Now the big question is, does this mean the market is slowing down for good? Or is it actually the perfect time for smart buyers and investors to make their move? Let's unpack what's really going on and figure out what it means for you. Ready? Let's dive in. What's happening now? First, let's look at the numbers. From July to September 2024, only about 1,500 new private homes were sold. To put that in perspective, the usual average is over 2,000 units per quarter. What's going on? Here are the three main reasons. Higher interest rates. Borrowing costs are up, which means higher monthly payments for buyers. Understandably, people are hesitant to commit. Economic uncertainty. Rising living expenses and global inflation are making everyone cautious about big-ticket purchases. Seasonal trends. The Hungry Ghost Festival and school holidays often keep buyers on the sidelines. Sounds like a tough market, doesn't it? But here's the thing. A slow market can be full of hidden opportunities. Let's find out how. Are falling prices good or bad? Private property prices dipped slightly in the third quarter of 2024. Now, depending on where you stand, this could be good or bad news. Let's break it down. Prices in the core central region, CCR, dropped by 1.5%. These prime areas rarely see price dips, so if you've been eyeing a property there, this might be your moment. Prices in the outside central region, OCR, barely changed, dipping just 0.1%. This region remains a favorite for families seeking affordability. But here's an interesting twist. While overall sales are down, the average price of new condos jumped from $1.7 million to $2.4 million recently. Surprising, right? This suggests that wealthier buyers are still driving demand in certain segments of the market. What does that mean for you? It means there's a lot more to this story than meets the eye. What's holding buyers back? Let's dig deeper into why so many buyers are staying on the sidelines. Expensive loans. With interest rates between 3% and 4%, monthly payments are higher than ever. For many, it's a deal breaker. Market uncertainty. People are wondering, will prices drop further? Should I wait? This hesitation is keeping buyers from pulling the trigger. Limited new launches. Fewer projects mean fewer choices for buyers. No one wants to settle, right? But here's something to think about. History tells us that when the market recovers, it often rebounds quickly. Waiting too long could mean missing out on the best deals. So what should you do?
Welcome to AskAgnesHDB, your go-to channel for expert advice on everything HDB. Whether you're navigating your first flat purchase, selling your resale HDB flat, or just wanting to stay updated on the latest property trends, you're in the right place. Subscribe now and let's make your HDB journey smoother.
Why? The market always bounces back. If there's one thing we know about Singapore's property market, it's that it always bounces back. Don't believe me? Let's take a trip down memory lane. During the Asian financial crisis, property prices fell by 40%. Sounds scary, right? But within a few years, they rebounded fully. In the global financial crisis of 2008, prices dropped by 20%. Guess what happened next? They soared by over 60% in the years that followed. These examples show us one thing. Every downturn is followed by a strong recovery. The question is, will you be ready when the market turns around? Spotlight on interest rates. Now, let's talk about interest rates. They've been a major factor in this slowdown, but here's the good news. Rates are expected to drop over the next few years. Imagine this. You're eyeing a $2.5 million property. At the current rate of 4.25%, your monthly payments are around $200. But if rates drop to 3%, your payments shrink to about $7,900. That's a big difference, isn't it? Lower interest rates could make homeownership more affordable for many. And when that happens, demand usually spikes, pushing prices back up. If you're a buyer, acting now could mean locking in a great deal before the competition heats up. What do you think? Is this the right time for you? Smart strategies for buyers. Thinking of making a move? Here are some strategies to help you navigate this market like a pro. Focus on location. Properties near MRT stations, schools, and shopping malls tend to hold their value well. Convenience is king, after all. Look at upcoming developments. Is there a new train line or business hub planned nearby? These can significantly boost property values. Compare prices. Don't just look at the sticker price. Compare the price per square foot with similar properties in the area. Consider layout. A well-designed unit can feel more spacious and be more attractive to renters or future buyers. Check financing options. Shop around for the best loan packages. A good interest rate can save you thousands. Which of these tips do you think would help you the most? Let's discuss. The role of government policies. Singapore's government has implemented various cooling measures to keep the property market stable. These include higher stamp duties and tighter loan limits. While these policies might seem like obstacles, they're actually designed to prevent speculation and ensure a sustainable market. What does this mean for you? It means you can invest with confidence, knowing that the chances of a sudden market crash are slim. So if you're a cautious buyer, these measures should give you some peace of mind. Looking ahead to 2025, experts predict that 2025 will be a turning point for Singapore's property market. Why? Because global economic conditions are expected to stabilize, which could boost buyer confidence. Developers are also likely to launch more projects, giving buyers more options. But here's the catch. Waiting until 2025 could mean missing out on the deals available now. Remember, when the market recovers, prices often climb rapidly. What's your plan? Are you ready to take the leap now, or will you wait and see? Making the most of today's market feeling overwhelmed? Don't worry, you're not alone. The property market can be tricky, but staying informed is your best strategy. Here's how to get started. Track market trends. Keep an eye on property prices and interest rates. Knowledge is power. Seek expert advice. A trusted property agent or financial advisor can guide you through the process. Visit showcases, explore new launches, and compare your options firsthand. Plan your finances. Make sure you've got a solid budget and understand your loan options. Stay updated. Follow property news to spot emerging opportunities. What steps are you planning to take? Let's brainstorm together. Final thoughts. The current slowdown in Singapore's property market might seem daunting, but history tells us it won't last forever. In fact, this could be your golden opportunity to make a smart move while others hesitate. Whether you're a first-time buyer or a seasoned investor, understanding the market and planning ahead is the key to success. So what do you think? Are you ready to turn today's challenges into tomorrow's opportunities? Remember, staying informed is your superpower. Let's chat about your thoughts and strategies in the comments below. Good luck and happy house hunting!